Hello again, everyone. Welcome back. In the statistical analysis of the stock market video, I title it, So What About the NASDAQ? Because now we've had the Dow and the S&P 500 punch to new all-time highs, but the NASDAQ hasn't. So this week we're going to focus on the NASDAQ. We're going to start off here with the weekly view that we always show the side-by-side for the Dow, the S&P, and the NASDAQ. You've got the Dow and the S&P both sitting on a weekly basis at new all-time highs, but the NASDAQ is not. Now, I talked about the S&P 500 last week. I talked about the fact, so here we were sitting right here last week, right? And I looked at the daily chart. We looked at, potential similarities to a couple of different instances in the past. We talked about how there was a possible setup for a breakdown. But did a breakdown occur? Did it materialize last week? No, it just kept pushing higher. So did I or my members go short the S&P 500? No, absolutely not. I mean, we did not get any kind of indication that the price action was rolling over and breaking down. So this week, we're going to take a look at the NASDAQ Composite and see what it looks like. Now, before I do that, I want to just take a quick look at the ETF Dashboard that I share with my members every week. I went through this yesterday with them. So here's the dashboard we've got. I look at 16 different sectors, which, we've got the standard number of sectors, the traditional S&P sectors, and then I have a few of the subsectors I put in here. Like we have healthcare, XLV. Well, I also include the NASDAQ biotech in here. So the previous week, we had 14 of these 16 sectors were up, 2 down. The week before that, it had been 7 and 7, kind of neutral. So then it strengthened, and then this week, look at this. Not a single sector was negative. Now, communication services was basically flat, but the leader was home builders, and right on its tail was retail. Retail's been strong all year, but energy has overcome the retail to the upside. It's up 53%. Energy's been very, very strong here the last couple months, actually. So it's done pretty well. And then we look here at the indices. The leader to the upside was the SPY. Everything was positive. Emerging markets, Brazil really got whacked this week. And FXI, China, Hong Kong, I always put China, Hong Kong, because the vast majority of what's in FXI are large caps on the Hong Kong Stock Exchange, the Hang Seng Index. So it was up 3.7%. Here's the picture for the year. Commodities, copper got hit almost 5%. Silver, nice strong move. We're going to take a look at gold and silver this week because we've been looking for them to, turn around and keep pushing to the upside. And this week we had a nice moves, but they're still negative for the year. Natural gas has had a heck of a year. And we've talked about that before. When we look at the currencies, the dollar was weak this week, and the other were stronger. It's interesting, though, the yen. That is really interesting how it edged out the Chinese yuan. But for the year, the dollar is still slightly stronger than the yuan. And here's Bitcoin hanging in there. Of course, it came back strong. And then the bonds, everything is negative here this last week. So this is something we look at every week. Let's take a look at the NASDAQ. Okay, I want to go back over here to the home page. And here's the NASDAQ Composite. On Friday, it was down 125 points, but for the week, up 192, like I was just showing you on the weekly chart. So pretty interesting. We had the Dow was, the major indices, the Dow was the only one that was positive on Friday. So we'll see what happens here. It's also interesting, we got this close below Thursday's low. So watching this closely, the wave count I've got on the NASDAQ, I'm going to come back that weekly in a minute, but on the NASDAQ, I am still holding that the all-time high over here on September 7th is still holding. And I've got the wave pattern that says, hey, we're working our way to the downside. And the primary reason that I'm sticking with this is because this looks corrective to me. I've got this as a leading diagonal pattern for wave 1, and then I've got a corrective, a combination corrective pattern, WXY. And I'm sticking with this as a corrective because this doesn't look impulsive to me. If this was an impulsive wave, the first wave in here, whether you want to call it minute or minuet or whatever in terms of going down to lower degrees, I'm not seeing a 5-wave move. And then immediately we got this overlap in here. So this looks corrective to me. And because of that, I am watching for this to come roll back over. What are we looking at here? We're looking at the 130-minute chart, a 2-hour view. And it doesn't matter whether you look at that view or whether you look at the hourly view, the 65-minute chart. Let me zoom in a little bit here like that. I mean, we still get the same picture. So right now, that is what I'm looking at, watching for continued movement to the downside here on the NASDAQ Composite. We got a heck of a lot of earnings coming out this week. And here's one thing I wanted you to see. Over here, the week of February 7th, that is when the new highs minus new lows peaked on the NASDAQ Composite. And let me just pull that up for you right now. Here's the picture. New highs minus new lows peaked February 8th at 695. And then it's been nothing but mediocre strength in here ever since. And you can see the picture in terms of how we've just been oscillating over basically since March. And, we're not confirming any kind of, strength. It's just, pretty good weakness in here. And I think that just reinforces the picture that this last move, this last fifth intermediate wave, the way I've got it labeled, that this is very, very weak. So I continue to look for the NASDAQ to roll back over. It's going to be an interesting week. We got a lot of earnings. 25% of the S&P 500 is reporting this week. We got Facebook after the market on Monday, Alphabet, Microsoft, Twitter, AMD on Tuesday, Apple and Amazon on Thursday, and a host of a whole lot others. So that is the picture there. Okay, let's take a look at the high yield bond fund and see what it is saying right now. Okay, HYG continued to push to the downside here. It rolled back over weakness on Thursday and Friday. It was down 21 cents. So here's where we closed a week ago. And then here's what happened this last week. So the beginning of the week, it looked like we got a little bit of strength possibly kicking in, and then it just broke back down again. So we'll see what kind of continuation we get. It just looks like it's breaking trend lines and just not very strong at all. I mean, here's the weekly picture, down 38 cents. And then, of course, I've talked about this in terms of the view that it just hasn't confirmed any kind of new all-time highs in the marketplace. I mean, because it has not gotten above the January, February peaks that it had in 2020. So it continues to look and act like it wants to break down to the downside. So we continue to look at this because why? High yield bond fund, animal spirits, risk on, risk off. Right now, I would have to say HYG is saying risk off. Well, we'll see what happens. Because we're getting a little mixed picture with the Dow and the S&P sitting at all-time highs, or at least on a weekly basis, and then the NASDAQ week. Let's take a look at gold and silver. They have really strengthened here in the last few days. Okay, here's GLD. GLD was up $1.02 on Friday. Big, strong move, and it punched through this trend line that I had been showing my members on the charts. And, it looks like finally it wants to get some strength kicking in, nice volume kicked in on it. But, the negative was it closed below where it opened. It's like it couldn't hold a nice, strong, bullish day in here and getting, big white candles. We'll see what kind of continuation we get to the upside. I continue to hold a bullish view on this and on silver. Here's, I've got that on daily. I need to go to weekly. This is what I wanted to show. So I continue to show this as a weekly bullish view. And, right now I'm looking for continuation to the upside, working for this third wave. But if that's going to be the case, we need to see 5 nice, solid, impulsive waves in here for the third wave of the third intermediate wave to the upside. So that's what I'm looking for with GLD. And it's a similar type thing on silver. I mean, here's the picture. Now, the pattern isn't the same. This is the bullish scenario. Here's what I think is going on. Since that big move that occurred back over in August of last year, we've had this big flat, an ABC type flat in here. And I think the C wave was an ending diagonal pattern. And we're pushing now. And, this is a nice bullish looking move here on a weekly basis. And here's what's going on a daily basis, but we want to continue to see impulsive waves. Now, at some point, even within this, you're going to get, your corrective patterns on a pullback. I mean, there's no doubt, but want to start to see this. Number one, we got to start taking out some prior highs in here as we push higher. But right now, that's the bullish scenario. You can see how we got nice divergence that showed up back in here with the move that occurred to the lower on September. It wasn't confirmed by the indicator, and then boom, it just rolled around and turned right to the upside. Okay, that's it for this weekend. We've got a lot of earnings coming out this coming week. We'll see how the NASDAQ wants to perform, and do we get continuation out of the Dow and the S&P? We'll see. Everyone have a great week. If you felt like the video was was helpful, give it a thumbs up. And if you're not a subscriber to the channel, hit that little subscriber button. If you like more of that information, this kind of information on a daily basis, we look at this every day over at Beyond the Chart at joehenches.net. Everyone have a great week. We'll talk to you on the next video.